Good morning to all traders, and well, I would say welcome me back to Markets in Waves. I'm happy to be back after a while, and we have a lot to talk about. And we're going to start, of course, with five again, Elliott Wave analysis. Five, I mean, on five different pairs. And for this Mondays, the 26th. Elliott Wave Markets and Waves video, we're going to have a quick look on the US index, euro dollar, pound dollar, oil, as well as gold. Not much has changed since we last left the analysis, but there has been slight changes, and we're going to identify those, and I will explain also why those are, of course, coming into play at the moment. Starting with the DXY, guys. Initially, I had this as a leading diagonal, and I had this as the correction down in wave 4, and that was the end for wave 5. But what's happened, obviously, since we continued over here and we completed a triangle, then it makes a bit more sense to have a correction here that lasts a little bit longer than, you know, this one over here, because the correction in wave 2 was just this small thing over here, lasting like a couple of days. So that thing now has become something like correction running flat in wave C with an expanding ended diagonal in wave C, okay, which is a valid pattern structure for running flat. And in wave 4, we have a nice triangle, of course, that you can easily see with a truncated wave E. From there, guys, we move to 1, 2, 3, 4, 5 up. Okay, we have a triangle and diagonal over here. It looks like to me actually that we have diagonal, open diagonal with last leg being a diagonal as well. And yes, this to me marks the end of this upside move. And well, if you remember, wave 4 is well, it was an A, B, and a C. We're looking for a regular flat. You can see that wave D finished around the 90% of wave A, and wave C ended around the 5%. I would say it's that this is probably the middle between the 0 and 10 of wave A as well. So with that said, guys, I think we are done here, unless if, and the probabilities are not high, unless if this turns into some sort of ending diagonal over here, and we're going to head for a high that is going to get probably closer to the 98, 99% of the correction. But I doubt that is the case. I doubt why, because over here, I see 5 waves to the downside, guys, okay? And since I see 5 waves to the downside, that means for me, this is a wave 1, okay? Even if we assume this is A and this is B, then we're going to get C down here. Then you can understand that this would make an ending diagonal something open diagonal variation, and following a triangle of this sort of length duration, I would say, then it would be a little bit exaggerated to see an ending diagonal that is lasting nearly 3 or 2 times the correction in wave 4. Okay, so I believe this is our wave 1, and this is the correction to wave 2, and slowly either we're going to get B and C and then move lower down, or we're going to start moving lower down from here. And that, of course, to me, as you well know, I have been expecting this correction for a while, maybe not in this particular manner, because I was expecting that to actually continue lower down over here, to be fair, but we changed this view, and now the only one that makes sense to me is this very nice regular flat. That means I'm expecting still a 5th wave down. That is part of this complex correction in W, in X, in cycle degree C. And to me, this is either going to be an impulsive move to the downside, or it's going to be an ending diagonal, and we're going to be looking for a low at least below the previous low. Okay, so we're looking not at a short term, but also medium and longer term opportunity over here, which is also confirmed, at least in the short term, by both of the MACD and the RSI. This is enough for the DXY, guys. Now let's go quickly on euro dollar. As you can understand, they move quite, similarly. There is a good correlation between the euro dollar and the DXY. Actually, nearly 55-60% of the DXY, it is trading against the euro. So it is actually the EURUSD. So we are also expecting here, and I've been expecting a flat pattern over here. Okay, as you can see, we've done our wave 1 over here. We've done a wave A and a wave B, and actually, let's do that just for the sake of the argument, because we did it on the DXY. And let's see what we've got. Let's have a quick look. So wave B, 236. No, I think we're going to go for 0.1 and 0.9. You can see what my wave A, it's here. Yeah. My wave B, we did about the 90%, and my wave C, we're now again 5% or so, which is very similar to what we see in the DXY, guys. Okay. Now the structure obviously is a little bit different over here, because this is indeed a leading diagonal and this is a wave 2. So you can see, although it's not really the orthodox count, sometimes, you know, markets are not going to be perfect. I mean, they're not going to give us a perfect structure. So we can accept those sort of variations because of how the structure is built. It might be related to the broker, it might be related to some liquidity concerns, but in either case, what we see currently on EURUSD and this particular exchange, it's most likely looking as a leading diagonal here, you know, wave 2, wave 3, wave 4 as a triangle over here, which finished over here because it's got an overthrow in wave E. And then we've got ABC, 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 ABC and ABC, which means it finished here and we're going to start shooting higher, but I don't really like this as an impulse. That's the thing. Or it's going to be ABC, 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 and ABC, as I have already actually drawn. So you might think this is not really convenient, or it might be possible that I'm expecting another leg down on euro dollar, but not on the index. But look how the index has turned, and look how that the euro dollar has lagged over here a little bit. Okay, and to be fair, from the current levels at 117.80 down to a fresh low to 117.47, that's 40 pip range, which could be really again part of a correction in the DXY. And it would make more sense if we see that low coming in, because as I said before, you know, this move to the upside, it really does not make much sense, because we should have really finished the correction down here, which is probably nearly 90% of this wave to the upside, if that was an impulse. And that move to the upside looks very a bit, you know, it's like bulls are like scared or something, unless if it turned to something like this and then start moving higher. I don't see another leg to the downside not coming, okay, as part of the ending diagonal. As you can see also in the short term, the RSI and the MACD both support an upside move, okay. So we're either going to get the fifth wave of the ending diagonal and continue higher up with a sharp move and momentum, because we don't really see a sharp move or momentum coming in, or the other case is, guys, that we finished really down here. That's my wave 1, and that I'm going to get a wave 2 over here, and then I'm going to get the momentum and the good strength coming in the beginning of wave 3. Okay, and don't forget, this is only my wave 2 in the euro dollar, or it could be an A, of course, right? So, or a B. So this is either a B or a 2, but in either case, we're going to get either the C or the 2. So we're heading to at least the previous high, okay, and that high is likely to be the 123.49, and that is the medium-term opportunity. Okay, now let's jump quickly on the pound. Pound also moved exactly as we expected. You can see a lot of flats, guys, to be fair. On pound though, we are in wave 4 down here still, and as you can see, and that might be actually one of the reasons that the index is a little bit further down than the euro. Euro is lagging, pound is pushing the index further down. That's why the index is not really okay. The correlation with euro has broken a little. Looks like it's more correlated with anti-correlated, let's say, with the pound at the moment. Now 3, we're expecting A, B, and C. We did this high over here, so we were expecting that to be a running flat. Okay, we did. And 1, 2, 3, 4, 5 we were expecting, because it's a 5-wave structure. However, then we had this correction over here, which means, well, most likely going to continue lower down. And then we did 1, 2, 3, 4, 5. Since we got this 5-wave move down here, guys, that means really that maybe our flat correction over here, it's done. And this is an expanded flat variation, by the way, because we crossed below the beginning, not the beginning, the wave A pretty much, okay? Now, what I'm expecting to see to confirm the validation to the upside here is I'm expecting to see, because it's 1, 2, 3, 4 so far, I'm expecting to see 5, then a correction perhaps down here, and then a continuation up. I want to break outside this channel, guys. As long as we remain below this channel, then the chances of continuing lower are quite high. And I will tell you why. Because this can still be an ABC, this can still be an ABC, and then we can get another ABC, another ABC, another ABC, and that could end up being an ending diagonal down exactly at 134.86 and then continue all the way up, okay? As long as we remain below this channel. And this channel is our, well, it's our base channel because we connect waves 2 and 4, okay? Our acceleration channel is done, okay? So we don't need to worry about that. But what we need to really see to validate is the break outside this channel, okay? Now, we've got 1, 2, 3, 4, and 5 to me. It looks like we might even get a triangle here or some sort of flat, and then we're going to get a fifth wave up. Perhaps we're going to get to the channel, then correct, okay? This correction, guys, is very easy to project, let's say. So we're going to pull our Fibonacci from the new level. Let's assume now it's 137.91, and we're going to look at usually the 61.8, okay, 136.53. Of course, we would prefer to see some signal on the RSI and MACD. For now, we don't, okay? What we see on the MACD and the RSI, actually, contrary, you know, if you see this over here, this is like a signal to the upside rather than anything else, okay? Biased up. This is biased up rather than anything else. Now, let's jump to the US oil. Guys, US oil has worked wonders. Exactly as we expected. My wave 1 and my wave 2 are running flat, and my wave 5 up here with a very nice ending diagonal, and then my A and my B and my C exactly where I expected it to end, okay? And this is the 61.8 Fibonacci extension, guys, retracement of wave, intermediate wave 1 over here. So we pull a Fibonacci from down here to up here, yeah? And this is my 61.8 at 64.77. Didn't get quite there, but it got to what? 65, okay. Not really much of a difference. This is my golden correction. And also a very nice rejection on the base channel as well. And since then, we've had 1, 2, and 3, and 4. It looks like we're going to get a fifth one as an ending diagonal. Once this is done, or it might be already done because this is why I've got the Fibonacci over here, we might start receiving a correction down to the 67.87 or so. We might get that to be a shallow move, to be fair, to the 70, 69, 60, 68, 70. All these levels are to be watched closely. Okay, perhaps we can even get back to this channel over here and then shoot higher. And as you can understand, I'm expecting this to move higher, okay? This is 1, 2, so we'll go up for 3, okay? And we are only in the beginning of wave. Actually, we're in the beginning 3 of 3 or 3 of C, because this is either A, 1, 2, 3, 4, 5, or A, yeah, B, or C. In either case, we are heading higher. But again, similar to the pound, guys, okay, we have drawn the correction channel over here, and this is my base channel. My acceleration channel has already broken. And what I want to see, really, I want to see prices probably after the correction, because we also got a signal here on the RSI and the MACD for a correction. I want to see this correction down at 67, whatever it's going to be. And then after this, I want to see that channel really breaking, okay? And perhaps we can shoot higher without a retest, or perhaps we might do a short pullback and continue high. In either case, I want to remain outside that channel in order for us to keep moving higher up and reach the 81, 88, perhaps even $92, depending on whether this is going to be an ABC 1, 2, 3, 4, and 5. So medium term as well, very good opportunity. And finally, guys, gold. Here I have done some changes, okay? And the changes I did were related to this structure over here, okay? And this structure over here. As you can see, this is my wave 2, and I had actually this as wave 4. But then I looked, it's double its depth and double its duration. So I thought, well, that's not really a good thing, because usually the corrections last about the same. And okay, it's in terms of depth, fine, but you know, one should be like well, they should both complete around 100 Fibonacci. For example, if wave 2 corrects 60%, then wave 4 should correct around 40%. So the 40 and the 60 will be the 100%. This is not a rule, it's a guideline, but it usually is respected or around there. There is obviously some divergence, but this is a bit too much to say that both, because wave 2 corrected like 99%. So this correction really in 4 should be very short, which to me, this one makes sense because we've got 1, 2, 3, 4, and 5. So we've got the 1 and the 2 in the leading diagonal, the 3, the 4, and an extended 5. And within this extended 5, we'll have another 5-wave move, which also ends with an ending diagonal. And then this is my A, my B, and my C, which means this is my intermediate wave 1, intermediate wave 2. We finish down here, okay, because this is also clear a 5-wave move. And 1, 2, 3, 4, and 5 for wave 1. Yeah, that looks like some sort of a leading diagonal, perhaps, or it might be a W, X, and we might get the Y. But in either case, and as you well know, and as I said before, we expect the Fibonacci retracement, golden one, to be reached. Okay. Over here, we do of course have signals that they are contradicting one another. Okay. That's why I do believe that we might get another move to the downside before we start moving higher. Now, the really important thing to do here, guys, is that again, draw our channel over here and see what's happening with gold, because as long as we remain below this channel, again similar to gold, to pound and oil, we can expect a fresh or local low. We can even go down to this base channel. As you can see, this base channel is giving you a very good sort of bias to the upside, a very good slope, and I would be expecting prices to get that level without being surprised for a better momentum to be built from bulls. Okay. Now, as you remember before, I had this as 1, 2, 3, 4, and I was expecting 5 for intermediate wave 1. Now, with that being done, what it means that obviously our long-term target also changes, but I'm not going to get there for now. But all I'm saying is that perhaps the move to the upside is not going to be as extended as I expected like a month ago or so. So keep an eye on those channels, guys. I'm very happy to be back again. If you have any questions, go ahead and ask. Click this like button, subscribe, and leave your comments on our YouTube section. Thank you for watching, and we'll be again here tomorrow.